All right, today we're jumping right in. We're stepping onto a digital trading floor, a place that moves at the speed of light with its own coded language and, you guessed it, a ton of pressure. We're going deep inside the wild subculture of live stream day trading, and I think what you're about to see might really surprise you.
Okay, so imagine you've just dropped in. The first thing you hear, it's this. This is a real quote from the trading floor we're watching today. Yeah. What does that even mean? It's fast, it's packed with jargon, and if you're anything like me, it sounds like a completely different language.
So if that sounded like complete gibberish, don't worry, you're in good company. But here's the deal. Stick with me. By the end of this explainer, that sentence, well, it's not just going to make sense. You're going to understand the entire system, the entire mindset that makes it all tick.
So here's our game plan. We'll start with a peek at the floor. Then we'll crack the code on their lingo. After that, we'll get inside the trader's head, learn the unspoken rules of the game, and finally, we'll see how it all plays out in the real world. First things first, let's set the scene.
All right, so picture this. It's a Friday morning. The guy running this live stream, he's actually hoping for what he calls a relatively calm day. You know, the markets are kind of chill before things get hectic next week. It's that classic calm before the storm.
And right away, here's the first big takeaway. This isn't just people throwing darts at a board. Nope. Before the opening bell even rings, there's a clear strategy. On this day, the trader's already marked his territory. He's looking to buy NASDAQ around 23,200 and sell it near 630. So underneath all that fast-paced chaos, there's actually a map they're following.
Okay, but to read that map, you've got to speak the language, right? So think of this next part as our decoder ring, our Rosetta Stone for the trading floor. Once you get these key terms down, the whole thing starts to click into place. So the absolute basics, the bread and butter of this world, are concepts called resistance and support. You'll hear them called R1, R2, S1, all that. Just think of them as invisible ceilings and floors that they predict the price will bounce off of during the day. Seriously, this is the backbone of their whole system.
And check this out. Here's that concept in real time. As soon as the price hits that R1 resistance level, that ceiling, the call is instant and direct. That area is done. They stop and immediately shift their focus to the next level up, R2. You see? These aren't just suggestions on a chart. They're hard and fast rules for trading.
Now remember that crazy quote from the very beginning? Mid-band was a word in there? Well, that's another key piece of this puzzle. It's basically a moving line on the chart that they watch like a hawk for a signal to jump into a trade. So when you hear him say 30-20 mid-band works, he's just calling out that the indicator, that signal, just worked perfectly. It was a good call. Okay. So we've got the technical jargon down, but just knowing the numbers, that's only half of it. Trading is, and I mean this, a total mental game. It's a constant battle, a psychological tightrope walk between cold, hard discipline and pure, raw human emotion.
And you can see that internal conflict perfectly in the trader's own words. On one hand, the ideal sounds so simple, right? You have your numbers, you follow the plan. But then there's reality. A small win of $100 turns into $800, then $1,000, and boom, greed came in. That small, disciplined plan gets tossed aside for the chance at a huge one. And that's exactly where things can go off the rails.
You know, the trader leading the stream, he seems really worried about the newcomers. He calls their mix of sky-high excitement and zero experience a dangerous cocktail. To succeed, he says, you need a perfect alignment of your strategy and your emotional control. And he knows that's an incredibly tough balance to strike.
Now, this whole thing, it's not just a bunch of people trading alone. No, it's a community. It's a culture. And it has some really tough, often unspoken rules for what it means to succeed or fail. Let's pull back the curtain and look at the rules of this club. And it all kind of boils down to this number, $100. In this world, making $100 a day, that's not the goal, that's the baseline. It's the price of admission. It's the proof that you're disciplined enough to even be there. And they don't mince words about it. The pressure is blunt. This isn't a suggestion, it's a diagnosis. Failing to hit that $100 mark isn't seen as just part of the learning process. It's a sign that you, the trader, are the problem. And the consequence for failing? It's just as stark. The advice given to those who can't make it work is to literally sell their access, to give up their spot to someone more deserving. In this culture, losing money isn't just a financial hit. It's framed as a moral failure. It means you're just gambling, not really trading. So who are these deserving people? Well, according to the lead trader, they're often folks living outside of Canada, people for whom a $50 daily profit can be life-changing. He argues they're more disciplined because they have more to lose. For them, everything is on the line. It's this really intense idea that financial desperation is what forges true discipline. Okay, so now that we have all that context, the lingo, the psychology, the harsh rules, let's go back to that Friday on the trading floor and see how this all actually played out with real money on the line. Look at this. It's a perfect example of how brutal this can be. The trader had a plan to make a trade at a price of exactly 15, but the market reversed just 2 points shy of that number at 13. His order was just sitting there. It never got filled. A whole potentially profitable trade missed by the tiniest of margins. It just goes to show the insane precision this game demands. And reflecting on that near miss, the trader explains his thinking. He chose to be a little bit more conservative with his entry price, and because of that, he missed the trade entirely. It's that classic trader's dilemma, you know? If you don't take a risk, then there's no reward. And the grind, it just doesn't stop. As soon as the main 3-hour stream is over, the work just keeps going. The trader immediately provides numbers for people to use for weekend trading, and he's already planning to bring in a new, more disciplined floor manager. The pursuit is absolutely relentless. But his final takeaway from the day is what I find so fascinating. He concludes that he's giving out way too much information. So what's his solution? To simplify the stream down to the absolute basics. A new floor manager, just giving out numbers. Green to buy, red to sell. That's it. No more theory, just signal. Which leaves us with a really big question, doesn't it? After seeing all this, the intense pressure and the proposed solution to strip it all down to simple buy and sell signals, what are we really looking at here? Is this the discipline's new frontier of finance? Is it a high-stakes digital casino? Or is it maybe a warning that in this relentless search for profit, we risk trading away real understanding for just simple obedience?